Pippa Malmgren is founder and president of Principalis Asset Management and a former financial markets advisor to George W. Bush. Joins me in the studio now. So I guess there will be a lot of analysts and economists out there that will completely disagree with the idea of Germany's exit from the eurozone. What has led you to think that this could actually happen?
Okay, well, we have to look very carefully at the public statements of the last 10 days. Yesterday, the Vice Chancellor said there should be no limits to the possible scenarios for ending the euro crisis, to the scenarios we might think of. The finance minister has said something similar, that we have to think of all eventualities, was his phrase. Now, I think if we go through the sequence of events, it's pretty clear. The minute you realize the Germans are not going to permit a Eurobond issue, they are not going to rescue Greece, and they're going to ring-fence their banks, that means the bailout will be for their own domestic institutions, then every other country is going to be called upon to bail out their domestic institutions, but some of them won't be able to. So that means we're really on the brink of potential bank failures and potential further sovereign default. So in other words, Greece is the least of the problems.
I mean, what would a process whereby Germany exits the euro actually look like? Because many analysts are saying that it's absolutely not going to happen. Germany will do everything it takes to change the euro, and actually it's not even legally possible.
Well, I agree. The legal issues are formidable, but at the end of the day, it's a phone call to a money printer, right? It's not hard to do it. I think the key thing to understand is that if the euro falls dramatically in value as a function of further defaults well beyond Greece and further bank failures further beyond Greece, then the German politicians are going to think about price stability first. And that is when they can make the decision to say, we cannot sustain price stability in this environment. And to save Germany, we must exit, which means making a phone call. They can have the legal wrangling later.
I mean, again, I have to say that, you know, when you look at the benefits, who's benefited most from the single currency, many are saying that Germany has been the big beneficiary. There's no way it's going to return to the Deutschmark because the appreciation would effectively mean that it's not going to benefit from exports the way it has done with the euro.
Well, look at the statement last week when Jean-Claude Trichet was asked, is there a possibility that that Germany will go back to a Deutschmark? He spends 6 minutes defending that price stability from the ECB has been better over the last 50 years compared to the Bundesbank over the last 50 years. He doesn't just say, no, don't be ridiculous. He argues to the German public he can deliver better price stability than going back to the Bundesbank, which means he understands that this argument is in play.
Well, you mentioned Jean-Claude Trichet there, so let me then ask you about the resignation of Jürgen Stark from the ECB. It seems to have fueled concerns, not so much in terms of the implications for ECB policy, but more in terms of another sign of growing divisions within Europe about how to deal with the debt crisis.
I think we're past growing divisions. Germany is crystal clear. There will be no bailout, not for Greece, not for anybody. If they're going to write a check, they're exclusively writing it to domestic financial institutions to protect the domestic taxpayer. End of story. It's over.
We've already seen one bailout. They're going to vote on the second bailout on September 29th, despite the rhetoric that we've been hearing from German lawmakers, particularly Wolfgang Schäuble, who's been saying, well, we're not going to give them the money unless they meet fiscal targets. You know, I just spoke to Lars Feld, who's an advisor to Angela Merkel, and he said, look, this could be just another way of putting pressure on the Greeks, that actually it is very likely that that tranche will be approved, because then Greece will run out of money, they'll default, and that benefits no one.
Well, I think the bottom line is the German Federal Constitutional Court ruled last week to take the authority away from the Chancellor and give it to the Budget Committee. I think that we're going to see a 48-member Budget Committee having a hard time coming to an agreement to write that check. And at the end of the day, this ESFS is not funded. And the countries that are supposed to fund it are saying maybe we ought to think about the collateral, of which there is none.
Okay, I want to ask you one question on the dangers of the escalation surrounding the ECB's role in the debt crisis. You have an awful lot of policymakers coming out and really trying to emphasize the independence of the ECB right now. How dangerous could it be to have a loss of confidence or trust in this central bank, which has in many ways been the last backstop mechanism in terms of stability in this region? They've been stepping in.
They have. But I think this is the point of Jürgen Stark's resignation, to say that if the ECB is going to try and provide the liquidity directly, then they are not committed to price stability. That's the bottom line.
Okay, but if we have confidence and trust erode in the ECB, who's left?
That's why the Bundesbank comes back onto the radar for the German public, for German politicians, because for them, price stability is vastly more important than what might happen to the value of a new currency that might make their exports less competitive temporarily. That's because of their history.
Well, good to get your thoughts, your views. Appreciate it. Pippa Malmgren, founder and president of Principalis Asset Management.